Is life insurance worth it? The pros and cons of investing in permanent life insurance. When considering adding life insurance to your financial plan, it's important to determine if the potential for paying premiums for years is worth it. If you just want peace of mind that your loved ones will be financially secure if you pass away and they lose your income, term life insurance is probably worth it, even if you outlive the policy. But if you're wondering whether a permanent policy is a good way to receive tax-free investment benefits while you're alive, the answer is that most people would be better off getting a term policy and putting the rest of their money in other types of tax-free investments. Key takeaways: term life insurance can make sense if you want to be covered for a set period, during which your beneficiaries will receive money to help replace your income if you die. Permanent life insurance includes a cash value component that grows tax-free and can be borrowed against or withdrawn. You may consider using permanent life insurance to provide benefits during your retirement, but for most people, there are better ways to invest for retirement. Types of life insurance. Term life insurance is designed to cover you for a set term, hence its name. For example, you may purchase a 20-year or 30-year term life policy. These policies function similarly to other types of insurance policies you may carry, like car insurance. You pay a premium each month, and if something bad happens, in this case, your early death, there's a benefit paid out. Permanent life insurance, on the other hand, covers you for life as long as your premiums are paid. Certain types of permanent life insurance also can have an investment component that allows policyholders to accumulate a cash value. Pros and cons of permanent life insurance. Advantages: tax-deferred growth. Permanent life insurance policies that have an investment component allow you to grow wealth on a tax-deferred basis. This means you don't pay taxes on any interest on the cash value component of your life insurance policy. Lifetime coverage. Another benefit of permanent life insurance is that you don't lose your coverage after a set number of years. A term policy ends when you reach the end of your term, while permanent policies can cover you for life. If you anticipate people beyond the length of a typical term policy, this benefit may be attractive to you. You can borrow against the cash value. If you need money to buy a home or pay for college, you can borrow against the cash value of a permanent life insurance policy. Pros and cons of term life insurance. Term life insurance could be a good investment if you don't want to leave your loved ones with the burden of paying off debt or other expenses. Here are some of the most important benefits of purchasing a term life policy. Advantages: lower premiums. Term life is generally less expensive to purchase than permanent life insurance. That's because you're only insured for a set period, so the insurance company assumes less risk. The younger and healthier you are when you buy a term life policy, the lower your premiums are likely to be. Flexibility. One advantage of term life insurance is that you can choose how long you want to be covered. So, if you think you'll only need life insurance for 10 or 20 years, you can choose a term that matches your needs. That means you have predictability in estimating how much you'll pay in premiums over the entire term. A permanent life policy, on the other hand, is more of a guessing game because there's no fixed end date. You may be able to convert to permanent insurance. If you decide you want to extend your term life policy indefinitely, your insurer may allow you to convert it to permanent life insurance coverage. Doing so may increase your premiums, but it may be a worthwhile investment if you want to have coverage for life. Converting could also give you the opportunity to accumulate cash value. Disadvantages: when you buy a term policy, all of your premiums go towards securing a death benefit for your beneficiaries. If you're still alive when the term ends, the policy simply lapses and you and your beneficiaries don't see any money. However, you can think of term life insurance as an investment in the sense that you are paying relatively little in premiums in exchange for the peace of mind of knowing that if you die before your time, your beneficiaries will receive a relatively large death benefit. Why should I buy life insurance? If you want to give a measure of financial security to your loved ones in case of your death, life insurance proceeds can be used for family arrangement expenses at the time of death, to pay off outstanding debts, or for day-to-day expenses after your passing, among other things. The bottom line: finding out whether life insurance is a good investment for you depends on your financial picture and the duration of coverage needed.